Welcome everybody, another video here, another analysis. What crashed the markets? What was the catalyst? Well, there's talks that Kevin Warsh, the new choice that is leading the race for the federal chairman, could have been so. But I'm not really buying that because at the end of the day, he is aligned with Trump's lower interest policy, vast debt expansion. He's talking on both sides of his mouth. He's talking about lowering inflation. He has a hawkish stance on Wall Street, but at the same time is aligned with Trump's policy. Talks about how productivity will increase and will bring down inflation through AI. But we all know that AI is just this major investment that is requiring more and more resources. So how is that deflationary? We're gonna find out. But with oil, gold. Gold was overcrowded, and I think these were margin calls. There was a lot of leverage, a lot of euphoria in the system, and I've told you in the past, whatever moves parabolic like that has to come down in a parabolic way. I've stated that many times in my videos. You shouldn't be surprised. I haven't sold, but I do think that it's no coincidence that we flushed down. Let's see, how much did we flush down? It must be more than 10%. This is, oh, okay. So is, yeah, close to 12% and going. Okay, we don't know how much more. Hopefully buyers step in and we see this rally up 5%. But my fears is that this is a strong topping candle, and we will probably see further decline. Who knows? Maybe in the 4,500. With this size of a candle, folks, you might see another 5, even 10% drop. Now, some people talk about the COT, the Commitment of Traders report, and this is an example of why data and fundamentals will not always give you the best perspective. There were talks out there that gold is going to 6,000. I thought it would be going straight to 6,000, but with smaller pullbacks, not a 12% pullback. But the Commitment of Traders report, which is a great report, showed that silver wasn't overcrowded. So what's the excuse here? Silver seemed that it was equal in shorts and longs here, but a 25% drop in silver shows you again that whenever there's hype, there's over leverage. Same as Bitcoin. I'm trying to look at Bitcoin, and Bitcoin didn't dump as much. Sure, it did have a drop here, but Bitcoin had a 10% drop. And if you add it to last month or early January, it dumped 17%. So, we're noticing that gold and silver, with all this hype, is acting like a meme coin almost. This is not healthy. 25% drop in silver is not healthy. 12% drop in gold is not healthy. Now, what I think will help gold and silver in the future is a potential consolidation here, forming a bear flag and coming lower to my channel here of $94, if not lower. So let's see what will be the catalyst to drop the dollar lower. Sure, Fed policy has been consistent. They haven't decreased rates. And at the end of the day, this might be something that will spook the markets a little bit more. But even with the markets, we saw a major drop here. And I do think that if the markets don't regain the higher highs soon and close around here, we might see a further sell-off, like the type of sell-off we saw back in April when tariffs were announced. Okay, we're seeing a lot of volatility everywhere, but everything dumped. Everything did. Interest rates, although they jumped a little bit higher, they also sold off in this level. So it'll be interesting to see what happens. Again, for those of you in TLT, I told you, if we take out these highs, then that's when our trade is invalidated. Until that happens, I remain on the TLT trade. But surprise, surprise, everything dumped except for oil. Sure, we saw sell-off, but it wasn't as significant. And today, we're rallying back up. Oil is the place to be. I told you this before 2026. This is my favorite play for the year. I think it will do very well. With inflation adjusted metrics, this should be closer to $80, $70. I do think that once we take out this resistance that I had pointed out, the next trip would be here to challenge this number around the 70, if not higher. But I do remain bullish. I haven't sold my positions. This was a beautiful move. We're like 10, 15% up from these lows here. And I do think that oil continues to do so. So we look at the Swiss franc. Swiss franc dumped quite a bit. We'll probably come back a little bit lower to the 1.29, 1.28. And of course, there's a beautiful correlation with gold. Swiss franc is backed by gold. They hold the largest gold reserves from what we know, and this is no surprise. I want to point out the JP Morgan chart. This chart here looks like it wants to go lower, and if that happens, I think it will drag the markets with it somewhat. Whenever the banking sector doesn't do well, it usually has repercussions and ripple effect elsewhere. So this is very interesting phenomena. Oil gapping up, everything else selling off, and we're at this moment where even the VIX yesterday just jumped up higher. Sure, came down, but we see that whenever we are in these levels, we tend to get these jumps. Even over here, back in October, yeah, we saw that the VIX had quite a bit of a jump, I think even back in April. So let's take a look at this phenomena. Uranium dumped quite a bit and is looking like it's coming in a bit lower. But I want to talk about something else because although copper was doing very well, that took a major hit. But I want to take a look at another stock that I was pushing you towards to take a look at about a month ago. This was part of the rally that I told you we will see in defensive plays in Conagra. Conagra is something that, especially in a recession, will do very well. There's a lot of frozen foods and cheaper foods, but is based on agriculture. So I think that anything from the ground up that we extract and we use will be doing very well this year. Look at this beautiful trend line. It goes all the way back to August 2025. I do see this jumping at least 15 to 20% in the next coming months. Okay, we have a major resistance here at the 20 mark. We have another resistance at 21 and another at 22. I think that we see this. Yeah, I see this as a potentiality of reaching the low 20s. It's a very interesting phenomena. This is a period of a trader's approach when it comes to investment. I wouldn't be buying and holding something. I rarely do that. I do think that in this phenomenon of volatility, we will get more shakeouts. And I do think at the end of the day, it's a margin call. Whenever you're in a play that is fully leveraged, when you have instruments that are fully levered, it's bound to have a margin call where it's unsustainable to have so much leverage in the system, and at some point it will dump. These plays do not have leverage at the moment. Conagra or even oil. Yeah, they're double oil proxies you can play in options, but I think we're early in the game. I think we see another 10% at least in the tank for oil. So let's see how it develops. Bitcoin, it's struggling. I'll be a buyer around here, but if the head and shoulders plays out, watch out below. We might end up for another 60% drop. I think this goes to 30,000 if we don't rally up. There's a potentiality that Bitcoin after the capital rotation from gold and silver, like I mentioned, rallies much higher. There's a potentiality. Let's see how it plays out. If it takes out the 74,000 key level, then it's probably heading lower. If not, we might see it rally up to the all-time highs. That's all I got for you guys. Hope you enjoyed the video. Like, comment, subscribe, and I'll see you in the next one. Bye for now.